It's happening. Small business confidence is plummeting. We just got a new report what's happening with credit cards, and it's absolutely unbelievable. And on top of all of this, we also got a new fresh report about the bank runs that are happening and continuing to happen in the US. And people, it is far from over, and it's actually getting far, far worse. So everyone, this is going to be a very critical update. And if you appreciate these daily uploads with me uploading again daily, sacrificing my physical and mental health for your entertainment, please tap that like and subscribe button. Let's get into it. Look at this, everyone. US small business optimism falls to the lowest level in a decade. This is a massive, massive indicator, everyone, because if you want to know the health of the real economy, you want to look to see how small businesses are doing. And according to small businesses, this is the worst it's been since the Great Recession. So them trying to tell us that unemployment rate is at record low levels at a 50-year low and we're not in a recession, that is complete baloney. But wait till you see what's next in this report. The National Federation of Independent Business Optimism Index decreased by 1.1 points to 89. A gauge of owner sentiment about future business conditions slipped to a 4-month low, while a measure of sales expectations was the weakest since August. But that's not all. As we can see in this chart here, that contributed to a pullback in business investment. Less than 1 in 5 firms said they're planning in capital outlays, such as spending on new equipment and expanded facilities in the next few months, the smallest share since the onset of the pandemic. And again, I'll bring up the chart here. We can see here how much has fallen over the past 10 years, and also net share people planning to boost capital expenditures is absolutely plummeting as well. So not only is US small business confidence collapsing, also investment is plummeting as well. So these businesses aren't wanting to spend, they're not wanting to hire, they're not going to buy new equipment. And what do you think that's going to lead to? Well, all those businesses that they would have spent money on, well, they're not going to get any business. So then that means their bottom line is going to hurt as well. And that's going to cause a domino effect and lead to more and more layoffs. Listen to this. Only a net 3% of respondents said it was a good time to expand. While a touch better than the prior month, the share is still among the smallest on record. So you know things have really started to hit the fan when only 3% say it's a good time to invest. But what exactly is causing this? The combination of elevated inflation, high interest rates, tight credit conditions, and a recession concerns continue to weigh heavily on sentiment. And as business begins to slow, fewer owners are choosing to raise prices. So you can see here, small businesses are being hit from all angles. Higher inflation, high interest rates, and tougher credit conditions, which we've all been warning about in the channel for months now. But this is only the first piece of the puzzle of this story, everyone. So we know that the economy is weakening, small business confidence is falling, but unfortunately what they're now doing to survive is very, very dangerous. Look at this, US credit card debt jumps nearly 20%. That's right, 20% in the first quarter. Now, this is also what I've been talking about in the channel, everyone, that people are doing it really, really tough. They cannot afford the basic essentials like food, rent, utilities, gas, etc. So they're now starting to have to rely on credit cards just to get day to day. They're no longer living paycheck to paycheck. They're living credit card to credit card. And as I went deeper into this report, I was shocked of how bad it really is. So US credit card debt rose by nearly 20% in the first quarter when compared to a year earlier, hitting, listen to this, $917 billion as consumers tried to cope with high prices. First quarter data from TransUnion released Thursday show. This is absolutely unbelievable. US credit card debt is approaching $1 trillion. And I think it will pass $1 trillion this year, as like they say, higher prices are making people rely more and more on their credit cards, and this trend is only going to continue. Now, maybe if it was just credit card debt alone piling up, yes, it would be bad, but it wouldn't be catastrophic. But people are also going to all kinds of credit right now. Balances for unsecured personal loans also smashed records at $225 billion, rising, listen to this, 26% in the first quarter from a year ago. This is going to end people financially. Once they get into these debt traps with interest rates of over 20% of credit cards, and then to pay the credit cards back, they go and take a personal loan, we're going to see huge amounts of delinquencies and huge amounts of bankruptcies late this year and early 2024. So the average credit card debt per borrower hit $5,733 in the first quarter, while the average personal loan balance per borrower reached $11,281, or nearly 16% of the US median household income of $70,000, TransUnion said. They warned, though consumer price increases are cooling off from last year's hike, certain big expenses like rent and car prices are still far above pre-pandemic levels, potentially putting some families in a bind. I don't think it's potentially putting some families in a bind. This is absolutely happening across the whole US, and not just in the US, in Australia and in Europe as well. This is a huge global issue. We're having an absolute catastrophic debt crisis and also a catastrophic cost of living crisis, and it's not going to end well. So that's just a second piece of the puzzle. We have a weakening economy and debt is skyrocketing. Now, what this is going to lead to is huge amounts of increases in delinquency rate and also bankruptcies. But this couldn't happen at a worse time, because right now the bank runs are getting worse and we're also in a banking crisis. And if these delinquencies and these bankruptcies happen and all these banks can't get their money back, well, we're going to see the biggest financial crisis of our lifetime. Because look what's happening now. US bank deposit outflows continue. Small bank loans are also collapsing. So like people in the mainstream media, like all these big hedge funds that own a lot of money in these banks, are telling you that the bank runs are over, the banking system is sound. The data doesn't back that up at all. In fact, it says quite the opposite. So yesterday's continued surge of inflows into money market funds and increased usage of the Fed's bank bailout facilities set the scene for the ugly data from last week's NSA deposits to accelerate. So look at this chart here. This is very worrying. According to the latest HA report from the Fed, on a seasonally adjusted basis, total US commercial bank deposits fell by, listen to this, $13.8 billion just this week alone. This is also the second straight week. So I'll bring up this chart here. This is US commercial bank liabilities deposits. We can see here it hit a peak of around 18.2 trillion, and now $1 trillion in deposits has been taken out. However, on a seasonally adjusted basis, US commercial bank deposits, excluding large time deposits, decreased 25.4 billion last week. So this is even worse during the week ending 3rd of May. This is after rising 10.9 billion the week before, and this is the lowest since March 2021. And as we can see with this chart here, in case you believe the worst is over, regional banks had another ugly week, pushing their relative strengths to its weakest on record relative to the top S&P 500. So again, everyone, look at this chart here. These regional bank stocks are absolutely collapsing. And this man here, Nick, who's known as Nicky Leaks because he seems to get all the info of what's happening at the Federal Reserve and what's happening with the banks, he said, if you look at this chart here, if you exclude large time deposits, certificates of deposits over 100,000, deposits have resumed their pre-Silicon Valley Bank downward sloping trend. So look at this, everyone. We can see this downward trend is accelerating and accelerating quick. So I know you're thinking, well, okay, what does all this economic jargon mean for you in simple terms? Well, what this means is, everyone, small businesses, which is the heart of the economy, which employs the most amount of people, they're not confident at all. They're not going to spend. They're not going to hire. They're going to start doing layoffs. So this means the unemployment rate is going to skyrocket, and that means all these employees that buy stuff from these big companies listed on the S&P 500, their earnings, like I've been warning about, is going to get worse, and this is going to lead to stock prices have to come down and come down quick because it's still severely overvalued. What we've also been seeing is a huge debt binge for people trying to get by day to day. But unfortunately for them, eventually your card gets maxed out and you can't take on any more debt. When that happens, that will just make it even worse for small businesses. And again, all these things happening combined is going to lead to a financial crisis. This is something that happens every 7 to 10 years, and there's just simply no way we can avoid it because they haven't fixed any of the fundamental issues. They've just tried to print money to fix all their problems. They can't print money this time because we have a massive inflation problem, and if they do, this will cause inflation to surge yet again. So everyone, like I always say, I'm urging you to prepare right now because I don't want you to just become another statistic. If you got your job right now, do everything you can to keep that job, start a side hustle, get another part-time job, pay off any debt that's over 6%, or for me personally, what I would do, anything with 6% plus, I'll be paying off that debt before you even start thinking of investing. Get an emergency fund of a few months worth of living expenses, and then after you've done that, then you can start investing in defensive assets like gold, silver, and then also if you want to get out of the financial system, you can self-custody Bitcoin, so you can also leave your country. You know, it's quite hard to take $1 million or $500,000 worth of gold, you know, through the airport, but you could do that if you memorize your private key for Bitcoin, or also if you have it in cold storage. But again, I'm not telling you to go all in Bitcoin. That's just a very small part of your portfolio to, again, try to get out of the financial system. It's also very easy to barter with as well. But everyone, what do you think about this madness? Let me know down below. Now, for my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you all in the next video.